Hello and welcome to the Crypto Club and Digital Assets Weekly Catch-Up on Zoom. It is Sunday, the 6th of August 2023, and with all of these sessions, we never quite know what we're going to be talking about. All really depends upon who comes along, but sometimes we may talk about blockchain, DeFi, NFTs, ICOs, metaverse, TGs, any of the three acronyms really. We hold these sessions every Sunday evening, 7 p.m. till 8 p.m. UK time, and everyone's welcome to come along. So if you're a novice and you're just beginning to learn about these things, you want to know what the letters mean and that kind of thing, do come and join us. There's a link in the details below. Also, if you're an expert or you're running your own project, then come along and tell us a little bit more about it. In fact, we're even hosting now what I'm calling Gone in 180 Seconds. So this is where you get 3 minutes to talk, and it's only talk, no videos, no PowerPoints, no screen sharing. You get to talk about what your project is, what it's doing, what you're trying to achieve, that kind of thing. So as long as you're not shilling or spamming or scamming, welcome to come and talk about whatever it is you want to talk about. So with that, let's see who's going to come and join us today. Hey, it's Gabrielle.
Hello.
Hey, Gabrielle, how are you?
Hello, how are you?
I'm good, thank you. How's life in Spain?
Life in Spain, too warm today.
Too warm, okay.
Yes, but I just arrived. I have been swimming, so I'm relaxed.
That sounds good.
And you?
So how's your journey of learning about crypto going?
Good, but I feel like when more I learn, more doubts I have.
Yeah.
It's normal, I believe, no?
Yeah, well, I had a similar thing there. The more I learned, the more I realized that there was even more to learn. So it gets more and more detailed. But also, it encourages you to start learning about things like finances in the normal world. So when you start talking about things like Bitcoin and payments, you start learning about how payments works for traditional currencies as well. And that's where you get to learn about how bank accounts work and that kind of thing. And that's where you suddenly realize that bank accounts and banking does not work how you thought it worked. You know, everyone's got this vision that the bank looks after your money, and actually it doesn't. When you put money into a bank account, you're effectively giving them a loan. So it's their money. So that's why it is you get people complaining saying, oh, my bank won't let me buy something with my money. Well, it's not your money. And so it's from learning about how crypto works that you then learn how banking works. That then makes you appreciate you don't understand how a lot of traditional stuff works as well.
That's it. But for example, but I believe that this is a general though, because, okay, if I buy Bitcoin, for example, if I invest in Bitcoin, as an asset, okay, not for speculation, okay, just value. And maybe, for example, in 5 years, I want to monetize this Bitcoin. How can I monetize this Bitcoin just so quickly, or how can I do it? So, okay, I can sell, but I don't want to, if I don't want to do it with a third part. I mean, with a bank, for example, or with an exchange.
Okay. So I guess there's multiple things that you can do, and none of this is offering financial recommendations. It's just different approaches that people use. So one thing you could do is you could simply buy Bitcoin, store it, and wait for 5 years, as you say, and you see what the price is, and then you sell it, usually via an exchange. If you're going to sell it. Usually you convert it from Bitcoin to dollars, and then from dollars to euros or pounds or whatever. That's one thing that you can do. Another thing is once you have Bitcoin, you can then buy other cryptocurrencies. And so it might be that there's some cryptocurrencies that you think are going to increase in value or have greater value.
Yes, Ethereum, for example. No?
Exactly. Yeah. Yeah, that's an example. That could be one of them. And so if we take a look at the breakdown of all the cryptocurrencies at the moment, I don't know if you've ever seen it. I'll share with you a screen, in fact.
Okay.
With me.
And you believe, for example, in years, because I believe it could be, we can buy, for example, a house or a boat or an active passive with Bitcoin.
Mm-hmm.
Do you think it could be possible?
So there are already examples of people buying property, particularly in the Middle East, in Dubai. I think there's been a few cases
Exactly.
of people buying things.
Exactly.
So yeah,
mm-hmm. So there you can buy a house with Bitcoin.
Yeah.
And cars.
Yeah. So that's certainly possible. The problem at the moment is which countries are crypto friendly. Okay. And that kind of thing. So the Middle East, certainly the Gulf states and Dubai, Abu Dhabi, and a couple of others. In fact, Oman's just published some papers on virtual asset service providers now. A lot of the Middle East countries are quite crypto friendly, and so it may be possible for you to buy and sell things using crypto for high value goods. In other countries, you'll find it more difficult at the moment, and I suspect in Europe it's still going to be quite difficult, but it's possible. But I don't know. Can you see the chart that's up at the moment?
Yes.
Yeah.
Yes.
So it's kind of interesting because this is just showing the top 10 other cryptocurrencies that are out there against Bitcoin. So Bitcoin's kind of like this top one, but the purple one is Ethereum, as you mentioned. That's certainly got a fair percentage of. I've forgotten what the exact percentage is now, but yeah, Ethereum is certainly another one that is worth looking at because it represents a fair percentage of the overall market. So that's quite a good one. So coming back to your question, as you're saying, I'll just say hi to Adam, who's just joined us. Hey, Adam.
Hi.
And Adam's doing that 21st century thing of staying on mute.
Yes, I'm still mute, yes.
Oh, sorry, I didn't even realise. Hi, Gary. Good to see you, fella.
Hey, Adam.
No, right now, okay.
Good to see you. And we've got Elena's just joined us as well. Hey, Elena.
Hi, everyone.
Oh, good.
Hi.
So coming back, Gabrielle was just asking some questions about crypto and the future in a few years' time. I don't offer recommendations or anything like that, but she was just saying in 5 years' time, will it be possible for you to purchase a property or something rather than just converting your crypto back into cash? And I was saying there are examples in the Middle East, certainly, of people paying for apartments with crypto. And I think in the UK, there might have been a couple as well, but they tend to be quite problematic because most lawyers don't like dealing in crypto and the banks don't like it because whenever you're putting a high value transaction through a bank account, the bank has to undertake additional checks to make sure that the money is not illegally obtained or it's not fraudulent or it's not counter-terrorism funding or anything. So that they'll do what's known as a source of funds question, which is where they'll say, where did you get this money from and can you prove it? And they never seem to like crypto, even though they all now know about it, even though it's been around since 10 years or so, that they still don't fully like it when you say, oh yeah, I had some crypto and it did really well. So in a few years' time, yeah, you probably will be able to buy more and more things with crypto, and it won't just be going via an exchange and converting it to dollars or whatever. So, Gabrielle, I hope that in some way answered the question.
Yes, sure.
So, Adam, I don't. Have you been on one of these sessions before with us?
Yeah, I've been on one before, Gary. It usually happens at a bad time, but today I thought, you know what, I'm going to jump on. It's been long overdue since I joined your little forum.
Well, welcome back. And what's your interest in the crypto world at the moment? Because you do a lot of stuff with startups and that, don't you?
Yeah, well, that was really what got me into it, Gary. I mean, I assess startups and I help them pitch for funding. So when somebody brought me their crypto startup and then started talking about tokenomics and this model and that, I just had no idea of how to assess them or advise them. So really through personal curiosity and the need to have a broader range of assessment skills when it comes to startups. That's how I dipped my toe in, and it's been a rabbit hole, as I know that you know.
Well, it's funny. Right at the beginning, Gabrielle and I were talking about how it is that as you start learning more and more about crypto, you realise just how little you know about it because you get to discover more and more. But also as well, that the more you learn about crypto, the more you start to learn about traditional finance as well, and how bank accounts work and how payments work. And that's where you suddenly discover that you didn't understand how that worked either. So it's fascinating stuff.
Well, it's certainly made me more aware of the global banking system because the crypto conversations often segue in that direction. And the reality is I had no idea, Gary. I mean, it's been a total wake-up call, the Great Reset and all of the conspiracy theorists out there. But I mean, if you put the figures, they're just showing data about global debt versus GDP. And you can see if this was a business, you would bankrupt it. And, it's unsustainable. Now that I realize that the entire global banking system is unsustainable, I get more and more interested in crypto.
Yeah. The one thing I always pose of people who are looking at the wider economic thing is when you look at global debt, what number do you think is the global net debt in the world?
Trillions.
Well, go on. Any other offers? Who'd like to throw a number for the global net debt?
I don't know what the global net debt is, but I know that it's around about 3 to 4 times more than global GDP.
Mm-hmm. But this is a really interesting thing. And most of the time you'll hear gross debt talked about, and you'll talk about the global gross debt. And the reason I say net debt is net should be after everyone has been paid off what is left over. And the curious thing is, nobody ever says that the global net debt is zero. But it must be. Because if there was just the two of us, if we lived in a world where there was just Adam and I owed Adam some money, then I'm a creditor to Adam, which means that I go in his profit side, not profit, the creditor side of owing him money, and on my thing, I'm a debtor type thing. They should net out. And so if we paid all the bills off between us, you should end up with zero. But we don't for some reason. And I find that curious. It seems as though there's a leak in the global economy in some way. And that's why it's curious. Everyone always talks about gross national debt and that kind of thing. So I said a while ago that it'd be interesting if you look at how much is paid on interest payments on debt around the world. Well, actually, if you netted all the debts off and everyone paid everyone off, then there'd be no interest to pay, which could probably save us quite a lot of money. So anyway, that's my thing. So Adam, any projects or anything that's keeping your attention at the moment?
Well, I mean, there's always interesting ones that I assess, Gary, but the most recent thing that I've come up with through exploring the space and seeing various proposals, I work closely, I'm an advisor for a charity called EcoFlix, and they're looking to gamify their platform, but it's not very gamified. And it dawned on me that their global mission is to get kids interested in the environment. And, in order to fast track their awareness of what I think needs to happen, I've started talking about a project that uses gaming, maybe Farmville for Web3 or something of that ilk,
okay.
To actually get trees planted. So, that's the project I'm looking at the moment. And I've only just started these conversations in the last couple of weeks, but it's kept me energized, and the people that are interested in it are really interested. So, yeah, we're just exploring that space at the moment.
Okay. And are you using, is it crypto or blockchain or something that you're using to track things? Because usually you find most companies now saying, oh yeah, we're trying to make it more transparent and all the ESG calculations, that kind of thing. So they're sticking that on a blockchain somewhere, I guess. Yeah,
we'll definitely be blockchain based. We're hoping that we can do it cross chain to to get more access to people. But I'm advising a lot of really good projects that this could plug into, and that's where I'm seeing if this game works and does what it says on the tin, then I can then help other ecosystems by the win-win of, look, this is what gamification looks like. Let's tie in the rewards to your platform as well. So that's what I'm looking into.
I was going to say, hopefully there should be plenty of examples now, because that kind of area is kind of maturing, particularly with Web3, which makes it easier to do things like gamification and reward-based behavior and that kind of thing. That's good. Cool. Excellent. Well, look forward to hearing more at some point then.
No, thank you. And what are you up to, Gary? I mean, you're always exploring in this space. What's the latest happening at your end?
The one is keeping me interested at the moment is around digital asset custody. And so if you think about that's not just cryptocurrency. That could be photos, documents, anything else, and linking that in with things like digital wills. So everyone, are thinking, well, most people actually aren't thinking about it, but most people have a will, and the will says, all my worldly goods go to blah, 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 whatever. Well, we're now getting to the point where some people own significant amounts in crypto assets, whether that's cryptocurrencies or NFTs, or they may have, digital artwork, not just an NFT version, but actual original stuff, or they may have documents that they think is of value in some way. And so I'm looking at, well, what do you need to do to put them into effectively a digital vault, whereby when you die, there's the means to pass them on. So there's some rapid growth at the moment around digital wills, so actually having your will online in some way. But more importantly, people are beginning to finally wake up to the fact that, well, what do you do with your private keys or your seed phrase or this kind of thing? Because a lot of people don't realize, they think, oh, yeah, well, I bought some crypto a while ago. I'm just going to leave it there to increase. I'll include that in my will. And so they include a copy of their seed phrase in the will, thinking this will be a way for the executor to recover the funds and that. But they don't realize that in many countries, a will, once you go through probate, so this is where you have to apply to the courts for permission to execute the will and that. Once that's approved, a will becomes a public document. So now you've suddenly published a document with a seed phrase in it, or with your private keys, which is not great. So I'm working with a project that is going to provide something, a completely different way of doing that, and having the ability to share out the ability to recreate a key. So if you think about how most wallets have got a private key, some firms might slice that key up into shards and distribute bits of it out to other people and that. We've developed a solution that doesn't do it that way. I describe it as non-custodial custody, because it allows you to have a custodial responsibility with actually not having bits of the key yourself. So that's quite interesting. So yeah, that's keeping me quite occupied, but always looking for new and interesting things going on. Talking of which, sorry, I see we've been joined by Christopher as well. Hey, Christopher. Hey, he's
Hi,
come back off
Gary.
camera. Hey, good to see you.
I kind of thought I was snacking and nobody would notice I'm here. But you called me out. Good evening to everyone. Welcome. I haven't been on one of these before, so I saw your
Okay.
message in the WhatsApp group, so I thought I'd just jump in there and see how you guys are doing.
Brilliant. Well, okay, there's no fixed format for these
Okay.
sessions. We don't operate to a fixed agenda or anything like that. And as I often say in the WhatsApp groups, they are open to anybody, novice, expert, anything in between. So if you've come along with any particular questions, feel free to ask away. Or if you want to share anything that you're working on, great to hear. So maybe a starting point is just share with us where you're based, what you do, what's your interest.
Okay, thank you for asking that, Gary. Yeah, hello guys. I'm based in London, UK, in East London. My background is technology. I used to work for the London Stock Exchange for going on 12 years, working in the technology department, and got first exposed to blockchain back in 2015, 2016. They were looking at some solutions. Maybe they're introducing it to the group. So I got involved in that, and I just went down this rabbit hole of being so enthused about blockchain and digital assets, crypto and stuff like that. And so fast forward, I'm more or less working on building a community around the layperson in learning about blockchain, digital assets. Earlier on this year, I did a presentation in Saudi Arabia to the ministries out there about blockchain in healthcare and how the challenges you have in healthcare, which is huge, and how blockchain can solve that. I did a piece on that, and some business mentoring with a lot of very, very intelligent Saudi women who are looking to really come into the forefront when it comes to business and technology. It's amazing what they've come up with using AI and some other solutions, but blockchain is still formulating. The regulators there, some are really trying to figure out what's the best approach with blockchain, because as you can imagine, Saudis being a very conservative country, so they like to tread carefully with how they introduce new technology and new ways of doing things. So since then, I'll be going back out there again in September, working on some incubation using blockchain technology. So there's a big innovation drive to launch businesses, Saudi businesses, and international businesses as well, utilizing blockchain technology and gamification actually for healthcare. So it's a big thing there. So I'll be helping with that, and I'm currently as well building a community called Crypto Coffee Club. I want to launch the website around that so people can come in and share their experience and learn about blockchain, digital assets, and then also be able to create solutions for companies, because tokenization is a big thing now. And I'm working with a blockchain based in Dubai who are looking to market their services, and they've recently launched a big initiative with the royal family in Dubai to tokenize in a big project, a property project, a land and property project, on par with the Burj Khalifa. So the Burj Khalifa was a big project, but now they're tokenizing big land and property projects now. So I'm going to get involved. I'm being involved in that as well. So there's a lot of different things, a lot of fingers in different pies that I'm involved in. But I really, at the heart of things, want to bring tokenization to corporates and enable them to tokenize their assets and enter this world of blockchain tokenization. Because I think tokenization is going to be the biggest driver in blockchain adaptation, digital asset acceptance, and the token economy as a whole. So it's a great time to be alive, to be honest. Looking at this emergence of technology that's bigger than the internet, and it's so many possibilities, and it'll create a even playing field to a lot of individuals who want to get involved to be able to participate and create businesses around the technology where probably developing countries never had the opportunity to do so before. Yeah, so I don't want to rant on too much, but yeah, I'll be very interested to have a discussion on that and
Cool.
what everyone else is doing as well.
Well, it's great. It's a shame you weren't with us last week, because one of the guys who was on the call, he's based in Dubai, and he's done some work in Saudi Arabia as well, which was not, I think it was non-crypto stuff. It was traditional finance, but he was very knowledgeable about a whole load of stuff. And it's really interesting. And there's so many overlaps. It's like you and I met up at a conference in London a few months ago.
Yeah.
Or it feels like a few months ago. I'm sure it must be probably longer now. And I remember you talking about things like healthcare records. And I'm still seeing various initiatives being tried with that, where it's never quite working. And I think I shared with you, my experience of healthcare is that it's never a technology problem. It's always a cultural problem of getting them to adopt things. And there's a lot of politics of a lot of power mad people within the healthcare industry, which makes it very, very interesting. But yeah, that's great. And certainly love to learn and share more about all of those things that you're talking about. And Middle East is definitely the place right now. We quite often have people who join us from Dubai, Abu Dhabi, in particular, talking about some of the stuff that's going on. And JT quite often joins us. He jets in from there sometimes. So yeah, it's amazing stuff.
Yeah, it is. I mean, you know, with healthcare, a lot of it's down to regulation, you know, and how they regulate the data, how they access the data. I mean, also there's a big project going on in Saudi at the moment with modernizing that at the current time by a New Zealand-based tech company. But from my perspective, I think, you know, when it comes down to it's down to education. I think a lot of people still don't understand blockchain and Web3 and the whole emergence of this technology, because they're so fixed on the way things work. It's just being able to have that paradigm shift into thinking of a new possibility, a new way of doing things in a way that, I mean, obviously blockchain doesn't fit every issue, a problem that we have, you know, there is certain things that really is not efficient, but I think a lot of it's down to the decision makers and the individuals who are in charge to understand what they have their hands on and how they can create solutions, how experts can or enthusiasts can bring something to the table where we can think in a more holistic way. And bring a different perspective on things, just like how the internet arrived back in the 90s into 2000s, where it took probably 10 years before it really took off, you know, or 15 years, I don't know. But the parallels to how internet adaptation took place with what we're seeing with Web3 is identical. It's identical.
Well, when you look at other technologies, this is what I find funny, because every so often people start criticizing blockchain because look how long it's been around and it hasn't got anywhere yet type thing. They forget things like, you know, everyone's getting excited by ChatGPT and AI at the moment. Well, AI traces its origins back to 1956. So, you know, artificial intelligence is 70 years old, and it's only now beginning to take shape type thing. You talk about the internet. I always find it funny because people tend to think of the internet, you know, it began in the early 90s or whatever it was. Well, I remember it much earlier than that, when it was linking in with things like ARPANET and the educational networks and that, which were probably, I would guess, mid-late 70s or something like that. So the internet, you know, TCP/IP is a protocol. has been around for a very long time. And then you had Tim Berners-Lee with the World Wide Web, which that's only been around for what, 20 years or something. You know, I still remember connecting to bulletin boards and that without a web capability. So, you know, it's funny, Adam's smiling there, which means he can presumably just about remember, you know, the early days of accessing internet bulletin boards and that kind of thing, maybe. But yeah, you look at what we now have, and this is the interesting thing about Web 1, Web 2, Web 3, and the kind of differences that they are quite big differences and shifts, moving from a simple static page of information, which was Web 1, onto a page that refreshes itself without you having to click the refresh button, which is kind of Web 2, to this whole interactive, knowing who you are, being aware, and all this kind of thing. More Web 3 is fascinating. So, yeah, I think we're still at the beginning of the journey, is my thinking. I still think it's early days. But then I've been saying it's been early days since I moved into this space, which was, 8 or so years ago. So we'll see.
Yeah, it's funny, in your head it's still early days, but I think all it takes, I mean, I don't want to hog the space. Alina's there and G, Adam, but when I was at the London Stock Exchange, they were poo-pooing blockchain. All the architects, they're saying, well, we got database replication. We've got all these safeguards here where the data can be replicated and shared. And why would we want to have a distributed way of doing things? It's not tried and tested. It's not been around long enough. So there was all these reservations, and basically, I said, no, there's something here. We need to look at this. I knew it was disruptive, but I think when you work in conservative environments, keep the lights on, keep everything working as it used to be. We've got companies with mainframes that are still running big systems in the banking and the finance industry. So they're very reluctant to switch that off and move to anything else. But when I was recently, capital markets are tokenizing their assets.
Yep.
Right now. They're tokenizing their assets. So with BlackRock and taking a lead and doing all these initiatives with Bitcoin and ETFs, but really, do you own Bitcoin if you buy one of those? But it's a lot of it's just, okay, how do you get assets under management and real world assets tokenized for liquidity and get rid of disintermediation and finality and settlement? All those things are very important. So
yeah, I agree. And you're right. I've been through this. I've probably been through this hoop several times of several iterations of this. That originally it was the whole, well, what does blockchain do that existing technology doesn't? And the answer actually is nothing in its own right. So yes, I'm a former database administrator. I used to do SQL Server databases, and that I could spin up a distributed database. So, blockchain's distributed. Yeah, I can do that. I could spin up a decentralized database. Well, that's blockchain again. Right. I could put a cryptographic layer onto it. Well, I can put security onto it. So all of these things about like making it a write-only, immutable, distributed, decentralized ledger. It's like, well, you could do that with existing technology. It's just you can't do it out of the box. You don't instantly get all those kind of capabilities. And then when they introduced what are mainly NFTs now, so non-fungible tokens or tokens in their various forms, they suddenly allowed you to do a lot more about automating tasks and getting it to write to the ledger and controlling it and auditing it and everything. So yeah, there's been some good moves in that respect. But I think it is still maturing. You look at stock exchanges, you say so ASX, which is the Australian Stock Exchange, they were looking at moving onto a blockchain-based trading system. And I think they were trying that for about 5 years. And they announced a few months ago that they were giving up on it because it wasn't meeting their goals of performance, security, all the things you'd expect kind of thing. or it'll get there, just not yet.
Well, it depends what technology stack they're using. You know, R3 were doing a lot of headway, making a lot of headway, and now they've joined forces with Hyperledger to collaborate because they realize they can't do it by themselves. The market's demanding more public blockchains now because of the capabilities and scalability of that, you know, taking the consensus security around transactions. You know,
actually, so I was going to add, because whenever I hear of anything new or any new buzz phrases, I try and share them, and I try and share what they mean as well, because otherwise Elena will always say, "What did you mean by that?" So the one I'm hearing a lot about at the moment is what's known as OCA. So this is off-chain assets. So I first knew them as RWAs, which are real-world assets. So this is having a token that represents something in the physical world or whatever. But I'm now hearing more about OCAs. So this is off-chain assets. So this is exactly what you're saying, but the likes of BlackRock and that, of having financial instruments with a crypto layer on top of them in some way. But the other thing that is now producing, and I hadn't really seen this much previously, it's a new and emerging area, is using a thing called homomorphic encryption. And what that means, because I get involved a little bit in cryptography and that, but what that means is that you can start gathering data in an encrypted form, and you can do calculations on it, and the calculations on it give the same result as if it was in its unencrypted form. Now, that's very, very powerful. I can see some furrowed brows on the call as people going, what? So what it means is, normally, if you've got some data, so say it's sales of stocks or assets or shares or whatever, normally you have to decrypt it before you do any analytics on it. Or say it's personal data, say it's healthcare records, for example. You normally have to decrypt it to do any analytics. With homomorphic encryption, you can do the analytics on the encrypted data. So you can't actually see what it is you're looking at, but you can do clever analytics on it. And what that allows you to do is to put an analytics layer in place without actually having access to the underlying unencrypted data. And that is really interesting from a privacy perspective, because it means privacy is maintained. So we're talking about healthcare records before. In the US, you've got rules like HIPAA, which is healthcare data restrictions. In Europe, you've got GDPR, where health data is it's a special category, and so it has to be looked after. If you can store it and process it and analyze it in an encrypted form, that introduces a whole new interesting layer of things.
I mean, it's similar to what it sounds like, that zero knowledge proof.
Yeah. The difference, because funnily enough, that was exactly the route I went down. So zero knowledge proof is the ability to prove that you know the answer to something without showing what the answer is. Okay. Homomorphic encryption is interesting because it means that you also don't know what the underlying data is, but you can do all sort of analytics with it. So it is similar, you're right. But it's something I'm reading up about at the moment, because it just feels like it might be the next big thing. And I think you and I were chatting about how it is in blockchain. You get these waves of innovation coming along. So you had like the crypto stuff in the early 2010s, 2014s. Then you had ICOs, which generated a load of fundraising. Then you had DeFi came about. Then you had NFTs. Then you've got the metaverse. And they're all kind of like waves of innovation. So Adam, you've probably seen this yourself, where you get the latest craze of all the startups that are doing stuff. So I think homomorphic encryption is the next. Yeah.
It's so exciting. It moves so quickly. That's what I like about crypto. I mean, the innovation's happening. at an incredible pace, and being right in there with all these young degens. I mean, they talk a language that often leaves me like completely clueless at the end of it, but I know that they're smart cookies and that they're going to create platforms that do incredible things. So my job is to simplify all of their crypto babble.
Well, I say, my consultancy is called Distillalytics. And I now say that's because I distill the complex technology into clearly understood business terms, the kind of thing. Because I remember when I first started going to events, and I'd be listening to the people on stage, and I'd be, oh, wow, what they're talking about is amazing. It sounds fantastic. I haven't got a clue what they're talking about, though, but it sounds very exciting. It sounds like something I need to learn more about. And that was fascinating on my journey. As I learned more and more through either reading books, watching videos, or going to events and that, gradually it came clear to me a couple of reasons why I hadn't understood what they were talking about. And this was where the light bulb came off, and this is why I now do my own education stuff. The first thing is that techie people tend to speak too technical.
Yeah.
And so they get into such a detailed level about Merkle trees, and I mean, there's me talking about homomorphic encryption. So, and then the other thing is that half the time they didn't know what they were talking about either, and they were actually just blagging it in some way. I think they'd read the Dummy's Guide to Blockchain before they went on stage or something. So that's why I got into the education piece originally, where I realised I could probably do a better job of translating things into a bit more reality type stuff.
Well, you couldn't do much of a worse job, Gary, because, to take that to another level, I couldn't even understand the questions that were being asked the panels at these events. So when you don't understand the question, I mean, that you're just going to be, in a different. So it felt very isolating being in the crowd. Yep. And what I did like about the crypto events is then when I went afterwards and started networking, then you'll find some bright spark that can really explain it simply. I think that's how we first connected. Yep. At one of the crypto events when Troy Norcross, I was talking this, I was chatting, James Bowater overheard me. He grabbed me by the arm. He said, I know exactly the person you need to speak to. And this was back in about 2018. And he put me to Troy Norcross. And I said, Troy, I just don't get any of it. I don't understand the questions. I don't know what blockchain is. I don't get crypto. He said, well, let me put it this way. He said, at this stage in the game, it's a bit like buying a token for a casino that doesn't yet exist and doesn't have planning permission. And I thought, Troy, you're a legend. Thank you. Why can't people just simplify it to that? Because those outside the space, as you well know, Gary, because you solved this problem, it can be very isolating. And even for me and you, once you get into the rabbit hole, there reaches a certain point where you don't realize that you've become one of the crypto crowd, and people outside the space don't even understand. Even your friends aren't giving you the time of day because you've got such a short window of capture to get them interested in it because of all of the FUD that's doing the rounds and the mainstream news, that it can be very isolating when people know that you're in crypto.
Yeah, I found it the other way around. I no longer try and educate my friends into crypto. I simply find my friends through crypto, and that makes it far easier. Yeah. And you're right as well. It is still a relatively small world. I mean, Troy and I did some work together out in the Far East where we were doing some joint education stuff, and he's got a pretty pragmatic approach on things, which is great. And it's funny, I was presenting at a conference in London one time to a bunch of investors. And it was fascinating because this was during the ICO craze where we're talking about tokens for fundraising. And picking up on your casino analogy, I said, well, it's a little bit like buying tokens to go on a fairground ride. Okay, so you know how you go on Dodgems and that kind of thing. You have to buy the tokens to go on the fairground ride beforehand. I said, but the problem is, they haven't built the fairground yet because they're going to use the money that they get from your tokens that you just paid to build the fairground ride. And some of the investors said, oh, that's a bit scary, isn't it? I said, no. What's scary is that the people you've just given your money to have never built a fairground ride before. And they've probably just read a book on how fairground rides are built. and they're now using your money to learn how to do it. And I had some quite seriously pale-faced people who came up to me after the event, and they said, "Thank you so much for explaining all this. We did not realize what we were investing in, and we now realize just how risky it is." And they were quite worried. So anyway, so you've been joined by JT. Don't want to exclude him. So hi, JT.
Hey guys. Yeah, I'm just out and about at the moment.
No worries. Well, you join us where we're just talking about general stuff about the latest evolutions in crypto and tokenization of assets and what will be next, really, I guess.
Yeah, I was listening to you guys.
Yep. Yeah. But yeah, Adam, coming back to your point, really, there is so much that is going on in space. It does make it fascinating. I mean, it's nice to be part of the community where I think I'm known as kind of like one of the old guard these days, because I've been doing these kind of things and running events, and I've worked with a number of companies doing stuff as well. But it is fascinating because, you know, every day you read about a new project and you either go, "Oh, wow, that sounds really, really different," or far worse, "That's about the 60th one of those I've heard." I see that with real world assets a lot of real estate projects where you constantly come across things. And then you get things, it's funny, Christopher was talking about Saudi Arabia and blockchain and that. And one of the really interesting projects that was going on a while ago was around the Hajj. So the annual pilgrimage to the religious thing. And I think there's like over 1 million people go to it or whatever. And there's a project that's looking at doing tokenized digital identity. Because what I didn't realize is that when you actually go into the Hajj, everyone's dressed just in robes with no personal identification on them whatsoever. Okay, so they don't carry bank cards or mobile phones or anything. So you've got 1 million or so people who are going to this massive event with no form of identity on them. And a few of them die. Every year, they end up with bodies. And it's like, well, how do you identify who the dead body is? That kind of thing. And that's where there was an interesting project. I can't remember who was running it now, that was looking at doing some sort of digital identity scheme using a blockchain to have the ability to do things like biometrics and that kind of thing to track down who people are. So
sounds like a WorldCoin pitch, Gary.
Well, it was funny.
Perfect, actually, quite perfect one.
Yeah. You're absolutely right. And that, funnily enough, when I heard that they were launching that, it sounded exactly down that route. So for those who don't know, WorldCoin is a project that's been launched by the CEO's a guy called Sam Altman, who was involved in setting up OpenAI. So these are the people who developed ChatGPT and eDALL-E and that kind of thing.
I don't, just sort of small correction. I don't think he's CEO. I think he's one of the co-founders. No, I think he's one of the co-founders only.
Okay.
And he was not active on it until he started getting a bit of traction. You know, now he came out all happy and singing, "Oh yeah, I've co-founded this." Not exactly like that, but I think
that's fair. It's good to clarify on that, because you do sometimes get people who say they founded something and actually that they were kind of on the periphery in the early days. However, so he is involved in OpenAI, so he's built something of a reputation on that. They've now done WorldCoin, which is this new cryptocurrency which you can register for using what they call an orb. So it's a device that looks at your iris or your retina or your eyeball, pulls out some metrics to develop a unique digital identity, which then goes onto a blockchain, and in return they give you a few WorldCoin tokens or whatever they're called. As is always the case with these things, straight away profiteers have moved in. So I believe in India, people are now queuing up to give the digital identity details, get some world coin, and then someone is buying those world coins off them at a discounted rate or something. So there's all sorts of stuff going on there. But I always find it fascinating when people try and introduce digital identity and crypto and blockchain together. So I don't know, in the last 10 minutes, if there's anyone has any particular questions or anything they'd like to share in any way?
If we talked about explaining the technology with simple words today, we forgot to define what tokenomics is. So that would be nice for people who don't know.
Okay, so there's multiple layers around tokenomics. So tokenomics is about how, if you have a token, how you determine what its price is. And there's multiple ways of doing that. The first thing is you can simply launch a token and the market determine what its price is. And that's why most of them get launched, they go up several dollars and then they tank to zero. But you can also include things like, is the token linked to some sort of utility? Does it have some value in some way? So does it provide access to goods and services, and what are they worth? So going back to my analogy before about the fairground ride, well, you could work out, how much is it to go on Dodgems? Well, that's a way of working out price for the token. Then you have things like, a lot of tokens are, I always get this mixed up, deflationary in nature. So anyone who does Economics 101 will understand that one of the very first graphs you draw in economics is what's known as the demand-supply curve. And this is where effectively when you take a look at the price of something and the number of units, demand increases as something gets cheaper, and supply increases as something increases in price. Okay, so you tend to see two lines. One is the demand line, one is the supply line. Where they cross is what's known as the equilibrium point. That's the market price at which something normally sells at. That's fine if you've got fixed demand, fixed supply, and all that kind of thing. But for a cryptocurrency or for any currency, what you want is for it to gradually increase in price over time. And how you can do that is by introducing a scarcity element. And this is where tokenomics starts looking at, is the token deflationary? Do you keep adding more and more of them? Or does it have what's known as a fixed supply? So Bitcoin, for example, has got a fixed supply of 21 million Bitcoins in total. And what happens is that every 10 minutes on the Bitcoin blockchain, every 10 minutes a new block is mined. And that includes a reward to the miner, and it was originally 50 Bitcoin per block. Then after 4 years, it's halved to 25, then to 12.5, then to 6.25, and so on. And the difficulty of mining gets harder and harder. So the idea is you introduce a scarcity element, which means that the overall price will gradually keep increasing. So that's part of the tokenomics. So tokenomics is about pricing a token and working out the mathematics behind whether you're going to increase the circulation, are you going to release a certain number of coins at a fixed rate or a variable rate, and does it have any value or utility outside of the actual crypto loan? I don't know if anyone wants to add any more on that. Christopher, do you have any views? Did I miss anything important on there?
Yeah, I mean, that was a great explanation, Gary. Also burning and tokens or coins based on transactions or any trigger as well, which takes the supply out of circulation. So, and I tend to use the analogy of fiat money. The normal central bank money. Pounds, dollars, euros, whatever. They print the money every single day. There's more money going into circulation every single. So the value of the money we have is next to nothing. It has no real value, no intrinsic value, because it's not pegged to anything. But because they print so much of it, it creates a I'm not an economic student, but it creates an inflationary type thing mechanism within the market. But when we have price mechanics where there's burning, there's halving, and fixed supply, circulation, staking, all these sort of terms have a price impact. And actually, there's courses that you can do to become a tokenomics expert out there, because
I'll be interested to hear whether Elena's actually getting what tokenomics is for. It is quite complicated.
Yeah, token economics.
It was meant to be a simple explanation, folks.
It does come back down to, it's the old demand and supply. And one of the things that you can do with a crypto token, and Christopher was absolutely right, you can do a thing called burning. So say you agree that part of your tokenomics model is that there's only going to be at most 21 million Bitcoin ever produced or whatever. Great. So you know what that future thing is, and you can control the rate at which that is brought into circulation. What you can do around demand and supply is you can alter supply. So you can either print more, which if you've got a fixed token supply of 21 million, you can't print more. But what you can do is you can reduce the remaining amount by doing a thing called burning. And what that means is that you transfer, for whatever reason, either when you've used it or after so many transactions, you transfer the crypto to an inaccessible wallet. So this is a wallet. Quite often, if you look at how you've got wallets which are 0.0000000, and so what you do, you transfer a certain amount to that wallet so it can never be used again. So it's like taking it out of supply. So you think about how if you've got 100 bottles of water, then if you've got 100 bottles of water and you pay £1 a bottle, if all of a sudden the manufacturer says, oh, actually, we've only got 50 bottles of water now, then the price of it will go up. And so by burning tokens, you're reducing the supply. And as long as the demand doesn't decrease, then that increases the value of it.
It's a bit like the prime drink, the prime, when there wasn't many primes in the market, and then you're paying £9 for a bottle of prime in the shops, and the kids were still paying for it,
No, it's all good. I mean, how I look at it, just as how I simplify tokenomics to people outside of the space, is how many tokens are the founders holding, how many are the investors holding, look at the token allocations, and not only that, look at two elements. Look at the total supply versus the circulating supply, because if there's a massive difference in those two, it means that the market can get diluted a lot. So ideally, what you're looking for, Elena, is a token that doesn't have more tokens coming out. It's not inflationary. And the circulating supply is as close as possible to the total supply as possible. So ones with high circulating supplies and not much to put in the market will have less chance of being dumped on as far as the price is concerned. So, I mean, that's how I explain it. I know that's a very simple overview of tokenomics, but for those new to the space, I mean, that's certainly, if you're investing in crypto, that's something to look at.
Thank you. Thanks.
So again, it's like many of the things in the crypto world, and I'm sure Gabrielle will probably agree on this as well. You end up listening to so many things, and you don't always get everything about a concept, but you learn a little bit, and then a little bit, and then someone mentions something, and then as we had there, Christopher mentioned burning, which I'd overlooked, and that kind of thing, and you just learn more and more and more type things. So it's definitely interesting. So JT's just shared something in the post about Huobi and Tron's executives allegedly arrested by Chinese police.
Oh wow!
Wow.
But
I'm gonna click on that link and look it up.
I thought that was old news, actually, because I thought.
Oh, it was today.
Oh, okay. So sorry, it's Tron now, isn't it? So is that Justin Sun?
Huobi and Tron.
Yeah, okay. So something to read up afterwards then, I guess, because we're just about to finish, unfortunately.
Yeah,
So
the interesting thing here is that a lot of people are happy with, Hong Kong opening and all that. And then this type of actions happen in mainland China. That's very confusing for everyone, Are they friendly? Are they not friendly? Because people know at any time Chinese government can just interfere in Hong Kong like they've done so many times, yeah?
Yeah. I think that's definitely where it's worth keeping an eye on these things because, okay, well, interesting stuff. Thanks for sharing that, JC, at the last minute. Something to go and read up about. Unfortunately, folks, we're at the end of the call. So we've just been joined by CPW just as I'm about to close the call off. So we run these 7 till 8 p.m. UK time every week. And I do try and finish on time as well. So I'll say thank you for everyone who's joined us. CPW, do come and join us next time. And have a great day, everybody.
Thank you.
Thanks, Gary. Thanks, folks. Really enjoyed it. Good